Check this out. This tweet showed up in my timeline asking this question. Why does a bank reject a business owner making $250,000 but welcomes a W-2 worker making $60,000? Well, it's because banks are designed to prioritize the risk of permanent loss over the reality of your success. And here's why. Companies have limited liability. If a business folds, it is very hard for a bank to go after the owners to recover losses. Underwriting a loan for a company is very complex because that liability can simply disappear overnight. But an individual, you can't just dissolve yourself. A bank chooses the W-2 worker over a business every day because that liability is harder to escape and easier for them to track. For companies, there is a much simpler product that works for them: a savings club. Instead of borrowing from a bank and paying interest on the principal, a company can join a savings club and start making contributions immediately. Once the company gets the voucher, they can go ahead and use the money as a loan, still without having to pay compounding interest for it. It is a much cheaper, simpler, and safer way to borrow for businesses and individuals without having to rely on the mercy of banks recognizing your financial capabilities. Plus, it is a lot cheaper than traditional financing anyway. A savings club doesn't start a lending relationship by letting a bank's algorithm decide if you're worth it before you even get through the door. This is an open system where the door is always open to anyone ready to save towards the future they want to build. The underwriting process still exists to protect the community's pooled capital, but the sequence is reversed. You get to enter first. You join the club, establish your reputation through consistent participation, and build your savings score. You work within the system to prove your commitment before the financing happens. In a savings club, instead of charging you rent for the money, which is very expensive, we charge for the service of providing the technology, the legal framework, and the ongoing management of the club. Because the interest rate is always 0%, every dollar you contribute above those service fees goes 100% toward your principal. So going back to the question, why does the bank say no? Because banks will always act like banks. They are built to harvest interest and avoid complexity. They're in it for an easy buck, and they don't have the ability to make a better assessment of the financial capabilities of a company in their old evaluative models. Instead of worrying about a bank's permission, you can join a savings club right now, plan ahead, and build your own reputation. The sooner you join, the sooner you gain access to the capital you need. When you stop depending on a bank to validate your worth, you stop needing to worry about their answer.